This stuff is not hard to do. It's nothing special. We make it special, but it's not special. Like having life insurance, savings, and investments, it shouldn't be special. It should be a standard. It should definitely be a standard. Yo, what's happening, man? We're back with another one. This is episode 8. Episode 8, Road to Financial Freedom. All right? And in this one, we're going to talk about life insurance. Now, this is one of those topics that are kind of sensitive, but it can be also boring because a lot of people think they don't need it. And you got some people that's like, I get around to it later. How you know what later is? Like when you leave and go home and go to work, you don't even know if you're going to make it home or not. We just assume we're going to make it home. Why do we think like that? Speaking collectively, why do we think like that? But yeah, I'm going to talk about life insurance, man. Enough of the small talk, all right? So by the end of this video, you're going to know what life insurance is, what's the purpose of it, what's the importance of it, and how it works, all right? So life insurance is basically a contract between you and a company stating that you, the insured, will pay the insurer, and in exchange, they'll pay out your beneficiary a specific number. I try to make that simple, but I definitely overdid it. All right, so you're going to pay an insurance company some money, and in exchange, in the case of your death, they'll pay out a lump sum of money to your beneficiary. That was better. That was way better. That was better. But that's what life insurance is. All right, and how it works, you have different types. You have term life and permanent life. Those are the two main types. But before I get into that, let me say this. When you apply for life insurance, they go by different variables. They go by age, gender, habits, and medical conditions. All right, so first and foremost, you have male and female. Gender, right? Females have a higher life expectancy than males. That's why generally they'll pay less in premiums than the males because they have a higher life expectancy, right? And then they got medical conditions. So of course you'll pay more if you have high blood pressure or diabetes or cancer or anything of that nature. And then you have, and if you smoke too, if you smoke or drink, which they definitely would ask you, if you smoke or drink, and they take that into consideration too. And it's good to be honest with that because when you do pass away, they might look into it and all that good stuff. I don't know for sure, but just be honest. And then they go by, I think they go by habits as well. I can't remember what they asked me. They asked me if I skydove. Yeah, they asked me something. But I didn't have life insurance for some years now. I can't remember the exact questions. I'm pretty sure they asked if you like to skydive or something like that. They asked certain questions, like what do you do as hobbies and stuff. Because if you do dangerous hobbies, of course they're going to take that into consideration as well. But yeah, so that's what life insurance is, and that's how they kind of grade you on the application to see what your premium is going to be. Yeah, that's it. Now, the purpose of life insurance is to protect your loved ones or close family members, because of course you may not love some of your family members. That's why I said loved ones or family members, because you might not love them all. That was a wild thought, but I just had to say it. So whoever is whoever's dependent on you financially, that's definitely who you want to name as your beneficiary. So your partner or spouse, kids, parents, whoever is dependent on you financially, that's who you want to get the life insurance for. You're not getting it for you. It serves you no purpose unless you get a whole life policy, which we'll get into it. But it serves you no purpose. It's for your loved ones for the most part. So when you pass away, you have life insurance, so now you're kind of passing on something to them. in the case of your death. Passed away, but guess what? You got a lump sum of money that'll protect you financially. Because I'm not here anymore. Life insurance is definitely for the ones that are breadwinners. If you the breadwinner of the family, you definitely need to get some life insurance. Just saying. I can't tell you what to do, but I'm just saying. But yeah, that's what life insurance is. That's how it works for the most part. And that's the importance of it, man. That's the purpose of it. Now let's get into the nitty gritty. You got different types of life insurance. You have term life and you have permanent life. Term life, it'll cover you for a specific term. Let's say 10, 20, 25, 30 years. You have terms within that type of life insurance. And it's saying, as long as you pay these premiums, which is what you pay each month to the company, as long as you pay these premiums, we'll cover your debt. Whoever you have listed as your beneficiary, we'll pay them in the case of your death. Yeah. Now, term life is much more cheaper because it doesn't have a cash value component. We'll get into that. But you can definitely get you a good term life policy that'll pay out a substantial amount. You can definitely get it. You definitely can. Now, this is coming from someone that took a tragic loss. All right, I'm not going to get into it. I ain't trying to hear no boo-hoo and all that. But this is coming from someone who took a tragic loss, but they did have life insurance. So I can say, even though you'll be going through grief with a tragic loss, it's best not to make it harder by not having life insurance. That was a bar. All right, so when you pass away, your family already gonna be going through grief. Don't make it harder by not having life insurance. Make it a little easier on them. Well, a lot easier. They're already hurting. Make sure they're not hurting financially as well. Make sure you got something lined up for them, at least with life insurance, man. If you don't have it, this is like bare minimum stuff. A lot of this stuff is nothing special, man. It's nothing special. This stuff should be the standard. But I ain't gonna grill y'all too hard, man. If you ain't got it, just go get it. I'm not gonna grill you too hard. But you definitely need life insurance, man. Why not protect your family when you pass away? You're not here anymore. So protect them while you can. I'm not trying to sell you anything. I'm just letting you know what you should be doing, man. That's it. But yeah. So that's term life. It covers you for a specific term. 10, 15, 20, 25, 30 years. As long as you pay your premium, then guess what? Your family will be insured. Well, you're insured, but they'll get the payout, whoever your beneficiary is. But yeah. And there's one more thing I want to say about term. Oh, so with term life, let's say what it is 10, 15, 20 years, whatever your term is, at the end of your term, make sure you're on top of it. Because let's say you're a day past your term. If it's been 10 years and 1 day, you're not insured anymore. So you have to renew it. But you have to stay on top of that. Make sure that you don't outlive. That was going to come out the wrong way. Make sure that you know when the end of your term is so that way you can renew. But the thing is, when you renew with term life, it's going to get higher. It's going to get more expensive because now you're older. You may or may not have a health condition that affects your term or anything like that. So that's one of the cons. That's the main con with term life is that it will get more expensive the older you get. And especially if you develop a health condition. That's why you need to be going to the gym, hitting weights. You need to be eating right. All that good stuff, man. That way you don't develop no health condition. And that's outside of life insurance. No, for real. You need to make better decisions. You're probably sitting there now eating a big bag of chips or eating pork chops, or you sitting there not even going to the gym, you being lazy. You need to get up on your grind and get better, man. Get some help. But that's the main thing with term life. Yeah. So that's term life. And then you have permanent life. Now, permanent life, you have whole life, universal life, and variable universal life. Those are the three components under permanent life. Now, I won't get into the difference between those three, but the main difference is the cash value component. It's more flexible within the three. All right, I'm not gonna get into it, but I'm gonna just tell you what permanent life is. Permanent life, it covers you as long as you pay the premiums. You're good. So let's say at 20 years old, you're young, you don't have any health conditions, whatever. As long as you pay your premiums, you're gonna pay the same thing until you're like 100. Because I think once you reach 100 or 99, one of those ages, you can't have life insurance anymore. Or you can, but it's gonna be hard to get it. But permanent life, it covers you. It's in the name. It's permanent. It covers you for the rest of your life as long as you pay your premiums. And the premiums is what you pay each month to the company. That's the fancy word for your bill. All right. They gonna make sure you're on top of your game with this insurance because they gonna toss some fancy words at you and stuff. So it's good to look into it and do your own due diligence. All right. So yeah, permanent life, it covers you for the rest of your life as long as you pay your premiums. Now, it's much more expensive than term life, and that's because it has a cash value component. All right. So when you pay your premium, a percentage of that premium goes towards a cash value component. So it's like a savings account that gains interest, or it's like an investment that gains, all right? But you're investing money into a cash value component, and you can borrow against it. But the main thing with borrowing against it, you have to pay it back. All right? If you don't pay it back, then let's say you have a policy, you have a permanent life policy, and the payout is $500,000. It may be more or less. Hypothetical number is $500,000. So let's say when you pass away, your family or your beneficiary is gonna get $500,000. And let's say a couple years ago or earlier this year, whenever you borrowed $20,000 from your cash value component. If you don't pay it back, then it'll just take $20,000 from the payout. So if your family was gonna get $500,000, now they're gonna get $480,000, maybe a little less because you got to think about interest as well. And that's it. To me, that's not bad though. That's definitely not bad because y'all suckers was gonna get $500,000. Now you're gonna get $480,000. You're still doing good. So that's pretty good. If you borrow against it and you don't have to pay it back, you don't get penalized like a 401k. You don't get penalized. So if you borrow against it, it's just taken out of the lump sum that your family was going to get. That's permanent life. That's the main part. That's everything you need to know about permanent life. It's much more expensive. You have a cash value component, and that's why it's so expensive. And as long as you pay your premiums, you're covered. All right? So when you get life insurance, please keep in mind that you need to let your beneficiaries know. Because if you pass away, I don't hear of too many companies reaching out to the beneficiaries like, hey, I know your mom or dad or sister passed, but they had life insurance. Here you go. I don't know too many companies that do that. So when you do get life insurance, make sure you keep your beneficiaries aware. Like, hey, look mama, or look son, or look baby girl, I got life insurance. So in the case of my death, here's my card. Because they always give you a card, you know what I'm saying, that you can give to your beneficiaries. It got your name, policy number, and all that. And they got the beneficiaries, which should be the person that you're handing the card to. So, yeah, make sure you let them know. So when you do pass away, they'll know what to do. Call the company, let them know what's good. And I think they'll ask for a death certificate and maybe even the policy number so they can know for sure, okay, you the beneficiary of that policy. But yeah, man, let me pause for a minute, make sure I ain't forgetting nothing. But yeah, that's life insurance. That's what it is. That's how it works. That's the purpose. That's the importance. And those are different. Those are a few different kinds of life insurance policies. So yeah, stay on top of your game, man. When it comes to financial literacy, It's nothing for real. It's really nothing. All it takes is some research and some pursuance. That's it, man. So have a plan of action and just execute, man. This stuff is not hard to do. It's nothing special. We make it special, but it's not special. Like having life insurance, savings, and investments, it shouldn't be special. It should be a standard. It should definitely be a standard. Like this is normal stuff. It's nothing special. That's how it should be. So yeah, man, just stay on top of your game. Make sure you got everything you need. And think ahead. Don't think just for today. Think ahead, man. Months and years from now. And think about your loved ones. Alright? So I hope you learned something from this video. And I hope you take heed to it. Don't just listen, but also take heed to it and create a plan of action and execute. Alright? So I appreciate you for watching. I'm glad I can help if I did help. So be safe and be blessed. And until next time, appreciate you.